Welcome to the Daily Earnings Report podcast, where we really get into earnings reports. Make sure to like and subscribe wherever you're listening to us from. Today, we are going deep on the Charles Schwab Q4 2024 report. You ready for this?
Yeah, I think it'll be interesting. Schwab is a pretty big player in the finance world, and their earnings can give us some good insight into, how the market is doing overall, and investor behavior as well.
Okay, so first off, Schwab's numbers are looking pretty good. Client assets are up a whole 19% year over year, which brings them to a total of $10.1 trillion. And it's not just like their existing clients, they're getting a ton of new clients too.
hmm
I mean, they added 1.1 million new brokerage accounts just this quarter. That's a 23% jump from last year.
And that's especially notable because they just finished integrating Ameritrade. Merging two huge companies could have been a mess, but Schwab seems to have done a pretty good job.
Yeah, they even hit record client satisfaction scores this quarter, which is kind of crazy when you think about how much could have gone wrong with a merger that big. What do you think led to that success?
Well, they were really focused on the client experience. They tried to make the transition really easy, for both Schwab and Ameritrade clients. And they kept people in the loop the whole time, offering support whenever they needed it. They actually won Newsweek's America's Best Customer Service Award for 2025, which kind of says it all.
That's a good point.
Yeah.
And, their mobile app also got a top rating from Corporate Insights, so it seems like they're excelling both in traditional and digital service. Okay, let's get into these financials. Schwab's net new assets for 2024 jumped by a crazy 20% compared to 2023. That's huge. What do you think drove that big jump?
I think it was a few different things. They had a lot of client engagement. Clients were actively investing and participating in the market. And we also saw a significant increase in margin utilization. Margin balances are actually up 34% from last year.
I think we might need to explain that one for some of our listeners. Could you break down what margin utilization means and why it matters here?
Sure. So margin utilization basically means that investors are borrowing money from their brokerage, like Schwab, to increase their investment positions, which can lead to bigger returns, but obviously comes with more risk too. The increase in margin balances probably means investors are feeling pretty confident about the market, maybe even bullish. That can definitely be a driver for asset growth.
So more borrowing could be a sign of optimism, but it also makes you wonder, what if the market takes a sudden dip? Could that leave some investors in a really bad spot?
That's a possibility, yeah. Increased margin utilization can definitely magnify losses as well as gains. It's something to watch, especially given how volatile the market can be.
Okay, back to Schwab's performance. One thing that really pops out to me is the growth in their managed investing solutions. They pulled in a record $55 billion this year. It seems like more and more people are choosing to, have their investments managed by professionals. What are your thoughts on this trend?
I think it's a trend that's happening across the whole industry. And I think it reflects a couple of things. First, the market can be really complex and volatile, so professional guidance is starting to look more and more appealing. Second, Schwab has a good track record in this area, which makes investors feel more confident about going with them.
Yeah, and it's interesting that a good chunk of these inflows, around 35%, came from former Ameritrade clients. So it seems like Schwab is doing a good job of integrating and converting those clients to their services.
Absolutely. It looks like the integration is paying off in a lot of ways. And it's also worth noting that Schwab offers a wide range of services, from fully managed portfolios to self-directed trading platforms. So they're really catering to all types of investors, which is probably a big part of their success.
Okay, now this part is really interesting. Schwab said that trading activity shot up by 11% right after the election. Do you think that's related to specific events or policies?
It's possible. Big political events like elections tend to create a lot of uncertainty and volatility in the market. Investors react to the uncertainty of potential policy changes and economic shifts, and that can definitely lead to more trading activity. It's interesting to see that so clearly reflected in the data.
So it seems like people were really paying attention to the election and making decisions based on what they thought might happen. Makes sense, especially these days when politics and economics are so closely tied together.
Exactly, and it highlights how interconnected everything is in the market.
Okay, let's circle back to those client satisfaction scores. Schwab managed to keep their clients happy even through what could have been a really rough Ameritrade integration. What lessons can other companies learn from that?
I think their commitment to communication and transparency during the whole merger process was really important. They kept their clients updated every step of the way. addressing any concerns and being proactive about offering support. That probably helped a lot in keeping clients satisfied.
That makes a lot of sense. Open communication and honesty can really go a long way in building trust and loyalty, especially when things are changing and there's a lot of uncertainty. Schwab really seems to understand the importance of making their clients feel valued and keeping them in the loop.
Absolutely. And that's a really valuable lesson for any company going through a major transition or integration. You have to focus on the human side of things, communicate clearly, and offer strong support. That can make a big difference in maintaining a positive client experience.
Right. Okay, so we've covered a lot already, from the impressive client asset growth to the record satisfaction scores and the successful Ameritrade integration. But we've still got more to explore. Let's dive a little deeper into Schwab's financial performance, their outlook for the future, and what it all means for the bigger financial landscape.
So let's get into those financials. Schwab's net revenues for Q4 are up a solid 20% year over year, bringing them to $5.3 billion. That's a big jump, and part of that is because of a strong net interest margin, which expanded by 25 basis points to 2.33%.
Okay, for those of us who aren't finance wizards, can you explain what net interest margin is and why it's so important?
Basically, it's the difference between the interest that a bank earns from loans and the interest it pays out on deposits and borrowings. So it's kind of their profit margin on the money they manage.
So a wider margin means Schwab is making more money, good for investors.
Exactly. A wider net interest margin usually means more profit, which is what investors like to see.
Speaking of investors, how did Schwab do with expenses? Their GAAP expenses went down 7% from last year. That seems pretty efficient, especially with the merger and all.
It might seem like they just slashed costs, but it's not that simple. Those numbers include some one-time expenses from the Ameritrade integration. If you take those out, their expenses were basically flat year over year.
So even just keeping expenses steady during a merger this big is pretty impressive. What does that tell us about their strategy?
I think it means they're being careful with their spending. They know they need to keep costs under control, especially in an industry as competitive as financial services. And you can see that in their pre-tax profit margin, which was a healthy 46.6% for the quarter.
Wow, that's great. It seems like they're doing a good job balancing investing for growth with keeping their spending in check. Okay, let's switch gears a little and talk about what's next for Schwab. They've mentioned some positive trends, like clients having lots of cash on hand and a decrease in bank supplemental funding. What do you make of those developments?
Yeah, those are definitely good signs. Client transactional sweep cash grew quite a bit in Q4, reaching $418.6 billion. That means that clients are keeping more of their assets with Schwab, which gives Schwab more opportunities for investment and revenue generation.
And their bank supplemental funding, things like repurchase agreements and CDs, went down by almost $15 billion in Q4. Why is that important?
It's a sign that they're financially strong. They don't have to rely as much on external funding, which can be expensive and unpredictable. They're using their own resources and client deposits, which is a smarter way to do it.
It sounds like Schwab is in a great position to keep growing. They're attracting clients, managing their expenses, and bringing in solid profits. But there are always challenges, right? What are some things that could affect how Schwab performs in the future?
Well, one thing is the overall economy. Interest rates are still low, which can make it harder to keep those net interest margins high. And if the market takes a hit, client activity and asset growth could slow down. Plus, there's always competition. The financial services industry is super competitive, with new companies and products popping up all the time.
So they can't just sit back and relax. They have to keep innovating, keep up with the market, and find ways to stand out from the competition. It's a fast-moving industry where you got to stay ahead of the curve.
Definitely. They need to invest in technology, improve the client experience, and come up with new products and services if they want to stay on top. Now, let's think about our listeners for a second. Imagine you're thinking about investing in Schwab. What are the big takeaways from this earnings report? What were the most important things to think about when you're deciding whether to invest in Schwab? Tell us what you think in the comments.
We've looked at how Schwab did in Q4, dug into their financials, and thought about what the future holds for them. But there's one big question we haven't answered yet. What does Schwab's success tell us about the big picture in the financial services industry? Are we going to see more power concentrated in the hands of the biggest players? Or is there still room for smaller companies to do well?
And even more importantly, what does all this mean for people who invest? Will this trend towards managed investing keep going, Or will we see people going back to managing their own investments? Those are questions we'll be exploring more in future episodes.
Yeah, it really does feel like things are changing fast in finance.
For sure, technology is changing everything, like how we get information and how we handle our money.
And Schwab seems to be on top of those changes, using both high-tech solutions and that personal touch.
It makes you wonder, though, what will happen to human advisors? Will they just disappear, or is there still a place for both technology and human expertise?
That's a good question. I think we'll always need human judgment, especially for those really complicated financial decisions.
But technology can make advisors even better, giving them data-driven insights and taking care of the routine stuff.
It's about finding that balance, right?
Yeah.
Using technology to make advisors more powerful and give clients a better experience.
That actually ties into another trend we're seeing: personalized financial solutions.
Right, it's not one size fits all anymore.
Mm.
People want solutions that are made just for them, for their own needs and goals.
And Schwab gets that. I mean, they offer everything from robo-advisors to customized portfolio management.
Makes you think, what will financial services even look like in 5 or 10 years? What kind of cool new stuff can we expect?
Hard to say for sure, but one thing's for certain: this industry is going to keep changing fast. The companies that adapt quickly will be the ones that come out on top.
Absolutely. Okay, that brings us back to you, the listeners. We want to know what you think. What's your prediction for the future of finance? Are you excited about these changes, or do they worry you a little? Leave us a comment and let us know.
Your thoughts and questions help us keep our conversations fresh and stay on top of what's happening in the financial world.
All right, that wraps up our deep dive into Charles Schwab's Q4 2024 earnings report.
Hope you found it interesting and got you thinking.
And if you did, make sure to like and subscribe to the Daily Earnings Reports podcast for more deep dives into the companies and industries shaping our future.
Until next time, keep learning, keep exploring, and keep investing in your financial knowledge.
Thanks for listening.